Okay, let's take a deep dive into something, well, massive and moving incredibly fast through Congress right now.
Yeah, sounds big. What are we looking at?
We're talking about a potential piece of legislation. It's over 1,000 pages, apparently just dropped into the process, and a stated goal: get it enacted by the 4th of July.
Wow, okay. That's ambitious.
It's
Is there a name for this thing?
it's apparently been nicknamed the One Big Beautiful Bill.
Right, okay, I've seen that.
Hmm?
So, based on the material we're digging into today, we've got this detailed breakdown, right? From a YouTube transcript analysis.
Exactly, that's our source.
Okay, so from that, this looks like the Trump administration's multi-trillion-dollar package. Huge scope spending, taxes, regulations, the works. And yeah, the speed is definitely one of the main things people are talking about.
And that's our mission for this deep dive, really. We want to cut through all the noise for you listening in and figure out what's actually in this giant document.
Mm.
How did it get this far so quickly? What are the actual chances it passes? And maybe most importantly, what could the fallout be? For the economy, sure, but also, for markets, maybe even crypto.
Yeah, let's try and give you that clear picture fast. We'll use the source material as our guide. You bring the key points, the energy.
And you provide the context, connect the dots, do the analysis.
Sounds like a plan. Let's do this deep dive.
All right, let's jump in. The scale is just wild. Trillions of dollars, over 1,000 pages. But maybe even crazier is the process they're using.
Hmm.
The source highlights this budget reconciliation procedure. Why is that such a big deal here?
Well, it's basically like finding a legislative loophole or maybe a shortcut.
Hmm.
Usually, big bills in the Senate need 60 votes to beat a filibuster.
Right, the supermajority.
Exactly. But reconciliation, that only needs a simple majority, 51 votes.
Oh.
So that's the trick, It's the only way something this huge with these kinds of money implications could even potentially move this quickly.
And it has been quick. The source said it cleared the House in just 2 days.
2 days. Passed by like a hair's breadth margin, 215 to 214.
2 days for over 1,000 pages.
Yeah.
I mean, just think about the detail buried in there. The administration, the source says, is calling it a once-in-a-generation opportunity to cement an America First agenda.
Yeah, that's the official line. But the market reaction, at least initially, tells maybe a different story, specifically the bond market.
Okay, what happened there?
Well, we saw a pretty negative reaction. Investors started dumping U.S. Treasury bonds, basically selling off U.S. debt.
Which means?
When lots of people sell bonds, the price goes down. And when bond prices go down, the interest rate the government has to pay on that debt goes up.
Right. So rising yields mean it costs the government more to borrow money.
Yeah.
And given where the U.S. national debt already is, that sounds like not great timing.
It's definitely concerning. The U.S. debt is huge, and the interest payments alone are staggering. Last year, what was it? $881 billion just on interest. To put that in perspective, that's actually more than the entire national defense budget now.
More than defense, okay.
Yeah. And this is where that scary idea of a death spiral comes up.
Explain that a bit.
Well, imagine your credit card interest is so high you have to get another credit card just to make the minimum interest payment on the first one.
Okay, yeah. Bad situation.
Right. And because you're borrowing more overall, maybe the interest rate on both cards goes up. On a national level, if the government has to keep borrowing more and more just to pay the interest on the debt it already has, and that new borrowing makes future borrowing even more expensive. Well, you get this vicious cycle, rising debt, rising borrowing costs, feeding each other.
A spiral. Got it. So against that backdrop, how does this one big, beautiful bill plan to pay for itself? The source said the strategy is like trying to have your cake and eat it too.
Huh. Yeah, that sums it up pretty well. The basic idea is pair massive tax cuts with big spending increases in certain areas.
Okay, what kind of tax cuts and spending increases?
The big one is making the 2017 tax cuts permanent. Those are the individual and pass-through ones, set to expire soon. On the spending side, think military, border security, deportation programs. Big increases there.
Right. Tax cuts plus spending increases. That sounds expensive. How do they offset that?
Well, offset is the key word. They propose offsets. Spending cuts in other places, the source mentions healthcare, food aid specifically. Plus, they're counting on revenue from new import taxes and, importantly, huge savings from finding government efficiencies.
Efficiencies, we'll come back to that. And there are some temporary tax cuts, too.
Yes, things like cuts for tips, overtime pay, car loan interest. But those are temporary, designed to expire in 2028.
Okay, let's talk about the numbers. The White House, according to the source, claims this whole thing could actually reduce the deficit, maybe even create a surplus. How on earth do they get that number?
Right. This is where the big accounting debate really kicks in. It hinges on a few really critical assumptions.
Like what?
Okay, first, they assume really strong economic growth because of the bill. Second, they assume a lot of money coming in from those tariffs. And third, and this is the really controversial part, it's how they treat the 2017 tax cuts.
Go on.
So, under current law, those tax cuts expire next year, September 2025. The government should start collecting more revenue then. But the White House accounting sort of says, well, everyone expects those cuts to be permanent anyway, people are used to them. So they basically treat the current lower tax rates as the starting point, the baseline. Making them permanent, in their view, doesn't cost anything compared to that baseline, even though a current law says taxes are supposed to go up.
Wait, so they're ignoring the existing law that says the cuts expire and saying that not letting them expire doesn't cost money because people like them. That
It's
sentence.
definitely not standard government accounting, let's put it that way.
Okay.
And that's exactly why the numbers look so different when independent groups look at it. You know, nonpartisan outfits like the CBO Congressional Budget Office or the Committee for a Responsible Federal Budget, the Tax Foundation.
What do they say?
They use standard accounting, they follow current law, and under current law, those 2017 tax cuts do expire. So making them permanent, that is a massive cost compared to the legal baseline.
Massive.
Their projections show the bill adding trillions to the deficit over 10 years. The range mentioned in the source is somewhere between $2.6 trillion and maybe $3.8 trillion, primarily because of making those tax cuts permanent.
Trillions. And the proposed spending cuts in healthcare and food aid don't cover that.
Not even close. The CBO apparently estimates those cuts at around $1 trillion. Significant, yes, especially for people affected, but nowhere near enough to balance out the tax cuts and the new spending.
Wow. So one side says surplus, the other says trillions in new debt. It's like they're not even looking at the same thing. The source used a metaphor, didn't it?
Yeah, it's like two groups looking at the same financial landscape, the same reality, but using totally different maps.
Right.
One map shows flat, easy terrain, maybe even a downhill slope towards a surplus. The other map shows huge, steep mountains, trillions in added debt that need to be climbed.
Even though it's the same mountain range they're looking at.
Exactly. The tools they use to measure it give completely different pictures. And that disagreement, that fundamental difference in how you count, creates enormous uncertainty about where the government's finances are actually headed.
Makes sense. And what about those temporary tax cuts expiring in 2028? Is that related?
It is. In a way, it's a common tactic. You put temporary provisions in a bill, they make people happy in the short term, maybe. But making them expire on paper lowers the bill's official cost estimate over the standard 10-year window.
Even if everyone secretly expects they'll get extended later.
Precisely. The source used that analogy, kicking the fiscal can down the road. You make the upfront price tag look smaller, pushing the real decision or the real cost further into the future.
Okay, so tricky accounting aside, where else were they hoping to find money? You mentioned government efficiencies. That sounds like the DOGE effort the source talks about.
Ah, yes, DOGE. Reportedly, this was an initiative spearheaded by Elon Musk.
Elon Musk, okay.
Yeah, and it was presented as a really central part of the plan. Not raising new taxes, but finding huge savings, rooting out waste, inefficiency, duplication inside the government bureaucracy.
And the initial promises were big.
Huge. The source mentions talks starting around $2 trillion in potential savings.
The trillion.
That was the early talk. But then, according to the source, the targets kept getting smaller, down to $1 trillion. Then the official target became more like $150 billion.
That's a big drop. Did they claim they actually found savings?
They did. At one point, the claim was $175 billion already identified.
Okay, $175 billion is still a lot of money. But the source seems skeptical about verifying that.
Deeply skeptical. This is the core problem. Independent analyses, like reports from the New York Times mentioned in the source, or these dedicated tracking websites that popped up, they could only verify a tiny fraction of those claimed savings.
How tiny?
Well, the NYT example cited was finding maybe $2 billion verifiable when the team was claiming $55 billion. And later trackers apparently found only about $16 billion confirmed out of $165 billion claimed.
So like 90% or more just. Couldn't be backed up by outside groups. Where were these numbers coming from then?
The source gives some pretty specific and frankly eyebrow-raising examples.
Like what?
Like claiming savings from canceling an $8 million contract but reporting it as an $8 billion saving.
Billion with a B? Whoops.
Yeah, or claiming savings from contracts that expired decades ago, or double counting savings, or claiming the maximum possible value of a contract as savings when it was canceled, even if only a fraction of that was ever going to be spent.
Okay, that doesn't exactly inspire confidence in the numbers.
Mm-hmm.
And were there other issues, unintended consequences?
Yes, the source mentions one big one. The IRS reportedly lost about a third of its tax auditors due to these efficiency drive.
Losing tax auditors. Wouldn't that cost the government money in the long run? Less enforcement.
You'd certainly think so. Fewer auditors likely means less tax collected from, say, wealthy evaders, not more savings. Seems pretty counterproductive.
So the takeaway on Doge seems pretty stark then. If this was supposed to be a key way to pay for the tax cuts and spending, and the savings numbers are, well, shaky at best.
Then a major pillar holding up the bill's fiscal argument just kind of dissolves.
Right. Did Musk himself weigh in?
Apparently so. The source notes that Musk eventually distanced himself, even reportedly criticizing the bill later as massive spending that would increase the deficit.
Which directly contradicts the administration's whole pitch for it.
Exactly. It's hard to sell trillions in savings when the guy you put in charge of finding them and it was saying the bill adds to the debt.
Okay, so wrapping up the bill itself. Huge scale, controversial accounting, questionable savings claims, projections of trillions in added debt from independent groups. What happens next? It passed the House by one vote. Does it have a prayer in the Senate?
It looks like a very, very steep climb. Even needing only that simple majority through reconciliation, the source really emphasizes the divisions within the Republican Party in the Senate.
What kinds of divisions? Is it all about the debt?
It's actually coming from different directions. On one side, you've got senators who are worried about those specific spending cuts, Medicaid, food aid.
Why them specifically?
Well, senators like Josh Hawley, Jerry Moran, Susan Collins were mentioned. They're concerned about how those cuts hit people back in their states, how it affects state budgets. Plus, the source notes it clashes with earlier promises not to cut those specific programs, so there's a political angle too.
Okay, so some think the cuts go too far.
Right. But then on the other side, you have senators like Ron Johnson, who apparently think the cuts in the bill don't go nearly far enough to tackle the debt.
Too much cutting for some, not enough for others.
Exactly. And then you have yet another group, like Rand Paul was mentioned, who are just fundamentally against raising the debt ceiling at all, which the bill has to do to allow the government to keep paying bills it already owes.
So you've got opposition because the cuts are too deep, opposition because they're too shallow, and opposition to letting the government pay its existing debts.
Yeah.
That sounds tangled.
Extremely tangled. It makes passing the bill in its current form seem highly unlikely. The Senate often acts as a cooling saucer or sometimes a legislative graveyard, as the source puts it, for ambitious House bills.
Longer-term statewide focus.
Right. It tends to moderate things.
Yeah.
So that July 4th deadline seems pretty much out the window based on these dynamics.
So what happens? Does it get changed? Does it just die?
Both are possible. They could try to amend it in the Senate to get the votes, but any changes mean it has to go back to the House, a start over, basically. Or, yeah, it could just stall out and effectively die in the Senate.
And if it stalls or dies, what about that debt ceiling issue? Does that just go away?
No, that's the problem. If no action is taken to raise the debt ceiling, either in this bill or some other way, the Treasury Secretary warned the government could run out of cash to pay its obligations.
When?
Potentially as early as August, according to the source, which raises the specter of another government shutdown. Or worse, though less likely, a default on U.S. debt. Shutdown is the more immediate risk if nothing happens.
So uncertainty continues no matter what. How does all this, the debt, the accounting fights, the political drama, the shutdown risk feed back into the markets you mentioned? The bond market and crypto.
Well, all this uncertainty keeps things volatile, especially for U.S. Treasury bonds. When investors are nervous about the government's finances or its basic ability to function and pay its bills, they demand higher interest rates to lend it money.
Pushing those yields up.
Pushing yields up, making borrowing more expensive for the government. And that brings us, as the source says, maybe one step closer to a death spiral, where borrowing to pay interest drives up costs even more.
Okay, and the crypto connection. Bitcoin.
Right. So the source brings up this perspective, sometimes called the fiat Ponzi view, though that's a critical term which questions the long-term stability of government-backed currencies like the dollar.
Because their value depends
on government decisions, continuous borrowing, and confidence in managing that massive national debt. So when you see huge debt loads, rising borrowing costs, political gridlock over basic finances, from that perspective, it shakes confidence in the dollar's future purchasing power and stability.
And if people lose confidence in the dollar.
Then alternatives, especially ones outside the control of any single government, start to look more attractive. Bitcoin fits that bill for many. It's decentralized, not tied to one country's fiscal health.
A potential hedge.
That's how it's often viewed. The source points out that perceived dollar weakness or long-term instability is often seen as bullish for Bitcoin's price. Because Bitcoin is usually priced in dollars, right? If the measuring stick itself, the dollar, seems wobbly, the thing being measured, Bitcoin, can look more valuable in comparison. Capital might flow towards assets seen as safer or outside that traditional system.
Okay, wow. We have really covered a lot of ground on this one big, beautiful bill.
Definitely a deep dive.
We looked at the sheer size, the controversial way it's being pushed through, the huge fight over the accounting, how you even count the costs and benefits.
Right, the Doge savings effort that seems to have fizzled or been based on shaky numbers.
The major roadblocks it's hitting in the Senate due to divisions within the party.
And what all that means for the U.S. debt, the dollar standing, and potentially the appeal of alternatives like Bitcoin.
Yeah, understanding these forces, government spending, debt, politics, market reactions, it really gives you crucial context for navigating, well, everything that's happening financially right now.
Absolutely essential context.
And it leaves you, our listener, with a really interesting, maybe slightly unsettling thought to chew on. If the people in charge, the experts, the independent analysts, can all look at the exact same financial plan, the same government books, and come up with answers that are trillions of dollars apart,
One seeing surplus, others seeing crippling debt.
how much faith can any of us really put in the official numbers and projections we rely on every day? And what does that level of fundamental uncertainty, that disagreement about basic financial reality, mean for the health of the whole system in the long run?
That is indeed a provocative question to ponder.
Thanks for joining us for this deep dive.